Nykaa from the internet space, and we have with us today founder of the company, Falguni Nayar, joining us to give us more perspective on what lies ahead for Nykaa as a listed company. Falguni, always a pleasure to have you on CNBC TV18. Now, I know you from your investment banking days, an investment banker turned founder today, and what a bumper listing of 1 lakh crore rupees of market cap. Were you expecting this?
No, not at all, to be honest. So I think, I know we built a great company, but ever since we embarked on the IPO journey, the kind of, as we met a lot of investors, and the feedback we got and revalidation of our business model has been amazing. And the listing today is a similar endorsement on that path where, and I always used to say Nykaa has received much love from our consumers, and today it feels like we're getting much love from our investors. So it's a really happy moment for us.
That's right. It's one thing to be a customer and another to be an investor. Now, going forward, now Falguni, at these kind of multiples, it's astronomical levels. For the investors now who have invested at a price, they've already made a bumper profit on the first day of pop. What about the sustainability of value creation for these shareholders?
I think what this kind of listing price does is puts a lot of responsibility on us to continue the growth momentum that we have enjoyed in this industry. I think e-commerce, because of the greater penetration of e-commerce within the retail sector, has been growing at very fast pace, and some of our valuation reflects that high pace of growth. And the investors want us to be able to deliver high pace of growth without too much of capital dilution, because that's when the equity story becomes far more interesting. So I think they are entrusting us with continued growth, continued new customer acquisition that we'll be focused on, but with a financial discipline that we've always delivered in the past. So I don't think we'll do much different. I think we'll try to do what we've done in the past and continue to build this company for the long run. Right. And investors will have to be patient a little bit.
All right, patient for how long, and what is the strategy between profitability and also garnering market share, because the competition is also fierce in the market?
No, when I say be patient, I don't mean that they have to wait for that eventual great company or great profitability. That's not what I mean. What I mean is that in a fast pace of growth, the power of compounding, as we call it, is massive. So as you wait out and invest, stay invested in a company through the power of compounding with a high growth rate in terms of sales as well as profitability that such a company can deliver with the right unit economic metrics that Nykaa enjoys, I think it's a good worthwhile investment for investors to be patient with and hold it for the long term in their portfolio, rather than worry about the short term. Is it looking overvalued in the long run? I mean, in the short term.
All right. When we talk about the numbers, Falguni, just before the IPO, of course, the promotions as well as the discounts, they have been squeezed, and therefore you made a profit of 62 crore rupees in the last financial year. I want to understand your strategy right now in terms of 3.5 crores of profit you made in the first quarter in this year. With that run rate, is that going to be sustainable in terms of profit for this year, where a lot of recovery has happened in the market in terms of consumption? But on the other hand, you're also looking at garnering market share. So I want to know your strategy in this particular financial year in terms of profits. Will it be able to beat your last year's profit?
I think all I can say is that we will try to do similar to what has happened in the past. So I think even in the past, the first half is not seasonally superior. Second half is starting October is when the seasonality sets in India, and October, November, December quarter is very strong. So I think that is something that you can expect. In the first half, we did not have, I think we have acquired far more customers this year. So for the first quarter results that we announced, I think we are talking about the trailing 12-month customer base at 7.7 million, which was up from about 5.1 million earlier. So there has been a huge improvement in trailing 12-month customers is the number that we report. And I think we will continue the similar momentum of customer acquisition.
All right. When we talk about customer acquisition, can you give us the economics, the unit economics, as well as the customer acquisition cost dynamics at the moment and how it has been trending?
No, I think it's difficult to say that because people like us, we do 360-degree marketing. Some of the marketing is towards brand building, and some of the marketing is more performance marketing, which leads to near-term sales. We also call it like, through the funnel, we can get customers to come in and convert, as well as we call it a big CRM focus to bring back our existing customers to buy with us again. So I think marketing is not a very simple answer for large companies like us, which have a very large base of returning customers. I think we've announced that more than 70% of our customers are repeat customers. So I think it's very difficult to say exactly how the marketing will pan out. All we can say is that investors have entrusted with their capital, and we'll be the guardians of that capital and do the right value accretive customer acquisition. And what that means is that cost of customer acquisition to long-term value equation of that customer remains positive, and that is being judged on a monthly basis.
So through this IPO, you have raised a very small amount of a little around 500 crore rupees. How much more capital will you need, and would you be coming back to the market again and again for raising funds for utilizing for your growth strategy?
So I think this particular capital that we've raised is going to go towards repayment of some amount of debt on working capital. To be agile, tomorrow if COVID hits us, we want to be an agile company. Secondly, I think this capital is also going to go towards building additional stores. The way things are looking in October, I think the retail had a large pickup, so we're going to continue expanding the stores. And we are going to continue to expand our warehouses because e-commerce is also chugging along at very high pace of growth. And we are an inventory-led company, so needing warehouses is a reality. I think at the moment we are building a large square footage of warehouse space. And that is also going to come on. It's been coming on stream, and it will continue to come on stream for the second half of this year. So in a post-COVID environment, we expect a very strong momentum and demand growth for both beauty and fashion. And we are preparing for that growth for the future.
All right. You mentioned some bit of it in terms of use of proceeds from the IPO. I want to understand your entire picture on capital allocation. Beauty is one business where you've proved yourself. On the other hand, there is also offline that is expanding, and fashion business is another which requires a lot of investment. What will your capital allocation breakup be?
I think we had said earlier, even in our prospectus, that we don't see huge amount of investment needed for neither retail nor for fashion business. I think both these businesses are, I think Nykaa has been very prudent on capital allocation. Like even in beauty, when we were at the early phase of growth, I don't think we had more than 20-30 crores of loss in a year. So I think fashion business is already EBITDA positive, and we think that it is not going to be a big capital guzzler. It is at the point where fashion business itself will not need further capital infusion. But yes, the market space is large, and we'll continue to grow the business and acquire more customers within fashion.
All right, so fashion is EBITDA positive, and it's not going to be margin dilutive, as a lot of analysts have been thinking about, and they want to understand more about the strategy of fashion. Is it going to add, or is it going to really deplete your resources in the near term?
I think the strategy with which we are executing, I think it will not be very margin dilutive. I think we will make, first of all, the gross margin for fashion are similar to beauty, and the only margin